2014 has been a very strong year actually for M&A, the strongest since 2008. We've seen overall M&A volumes increase by around 40%, significantly driven actually by the United States. But some of the other trends are an increase in cross-border M&A activity, up probably 30-40%, now accounts for almost 40% of the overall M&A volumes. Other key trends I think worth highlighting are certain sectors. The key drivers for M&A in 2014 were TMT, particularly consolidation of the telco sector. Also, we saw a big increase in life sciences in healthcare, a lot of consolidation, accessing of new technologies, research, and so on and so forth, and a continuation of what we'd seen before, particularly in financial services and energy and resources. In terms of segmentation of global M&A, corporate buyers are most definitely the most significant group, about 80% in 2014. Private equity, still significant, 20% of the overall total, which is very much driven by, I'd say, the mature markets of North America, parts of Europe, less active in Asia Pacific particularly. In terms of outbound M&A beyond the United States, I think one of the other themes that's worth noting is the importance of China. In 2014, for the first time, outbound activity exceeded inbound M&A, and we see that as an important trend that will continue. – 2014 was actually a very interesting year for India in M&A terms. Obviously, a new government came in May 2014. Prior to that, we'd seen a very difficult time for probably 2 or 3 years. Stock markets had been pretty depressed, strong inflation, low growth, and a general lack of confidence, I think, in terms of both people investing in India, but also confidence of Indian companies investing on an outbound basis. Since the election in May, we've seen a much more positive environment. As you've seen, stock markets have climbed to new heights. We are seeing inflation coming down. There is more optimism about the growth of the country, particularly in terms of domestic consumer trends. I think the government is going to ease a number of structural things which should assist M&A, such as anti-corruption, simplifying and opening certain markets for foreign direct investment, which should all be positive. Interestingly, even in 2014, we've already seen a fairly robust rebound. So both corporate deals, particularly domestic deals, have picked up quite nicely in the second half of 2014. Quite a lot of consolidation in sectors such as pharmaceuticals, obviously in IT, in ITES. But more importantly, I think we're now seeing international businesses again becoming more optimistic about investing in the country. Some fairly large deals, in fact. So Diageo, for example, invested in United Spirits last year. And I think there are a number of major companies, again, going to focus on the market. On private equity, again, had a very strong year in 2014. Private equity continues to be very much growth capital in the Indian market, very few control transactions. But I think importantly, we did see some significant exits. And I think the importance of that is it gives private equity confidence that they can actually get returns on their investments. I think looking forward to 2015, I would say that the market should continue to grow, should rebound in a similar way to we saw in the second half of last year. I think as things like inflation come under control, as we start seeing growth, I think M&A can only continue to grow. I think for outbound buyers, I think probably the major issue remains a combination of resource prices and also the currency. But I think probably overall a particularly rosy picture in the years ahead.